weekend was Biocon, and it was supposed to have a board meeting over the weekend where it announced that it is now going to make Biocon Biologics a 100% subsidiary. The board has also approved the swap ratios for the transaction and cleared a proposal to raise up to 4,500 crore rupees through a QIP as well. Ekta is here with the key details of this deal and also the key takeaways from the conversation that she had with Kiran Mazumdar-Shaw. Ekta.
Well, yes, Biocon is going to make Biocon Biologics a 100% subsidiary. They will be shelling around 6,951 crores in terms of a share swap, or the share swap is worth that much. And separately, they will be paying an additional $400 million to Mylan to buy out their stake. Now, a couple of key important points that the management did mention and did speak to us about as well in the call as well as in the interview, where one of the key reasons for doing this is that Kiran Mazumdar-Shaw mentioned that the Biocon stock, in fact, was undervalued post Viatris biosimilar buyout, which took place a couple of years ago. And with this, they will also be getting rid of the holding company discount that Biocon had. Now, they will have to assess Serum Mylan's timeline in terms of shareholding. But if it comes to, say, a succession plan, the board has been very well managed. And so hence, in terms of putting to rest any kind of speculation in terms of the longer term plans that Serum as well as Mylan could have in Biocon going forward. Now, about the promoter holding, which has now fallen below 50%, Kiran Mazumdar-Shaw said that she is comfortable with a 44% promoter holding in Biocon and that it is large enough. They will be raising additional funds for the Mylan stake via QIP, and this is something that they'll have to complete by the end of March. And before that, there will be an 1,800 crore bridge financing, which they will have to undertake. $1 billion is a comfortable level of debt, which they will look to manage going forward. The EBITDA and the EBITDA growth should be sufficient enough for the company as a whole to manage the debt levels. And when it comes to Syngene, remember that they have been reducing stake in Syngene since a couple of years, but they are looking to retain their current shareholding in Syngene, which is at over 50%.
All right, Ekta, many thanks for taking us through those details. But let's take a listen to Kiran Mazumdar-Shaw on the merger and the impact it could have on the company's financials. Take a look.
I think, Ekta, this whole concept of promoters is also fast dissipating. And of course, I will continue to be the largest shareholder in Biocon. I think at 44%, it's a pretty hefty shareholding. And I think today it's really about ensuring that you have good governance and that, shareholding should just be about being rewarded through performance. Well, I think we were oversubscribed when it came to the QIP, and I think we will go the QIP route because that would be the most elegant way of raising capital. And since we know that there's a huge interest in the Biocon stock, and especially through this announcement, we believe that the QIP would be the preferred route. So I think $1 billion debt for the kind of business we are building is a very comfortable debt to manage. And of course, as a company, because we will be throwing off free cash flow now going forward, given the fact that we've retired all the structured equity debts, which will of course throw up another 300 crores next fiscal, and the fact that we are now pursuing this route of merger, where a lot of the minority interest calculations and the kind of related party transactions will also free up more profits, I think puts us in a very strong position.
Kiran Mazumdar-Shaw there of Biocon. The other newsmaker